What the fuck is up, YouTube? Welcome back to another video. Trade recap. Today is Friday, right? Thank God it's Friday. Little disclaimer, this is not financial advice. It will never be. If you're not going to have something to do in 2 hours, or my bad, let me rephrase that. If you're going to have something in 2 hours or more, I would probably save this video to watch later and come back to it later, because I'm going to be explaining a lot. Usually I say it's 2 hours and it usually ends up being 40 minutes. But I'm going to go over every single little detail. This is probably going to be my biggest video of the year. So at least 2 hours I'm expecting. So if you're not going to be listening that whole time, then I don't know why you'd be even watching ICT in the first place, because his videos are not only longer, but here you don't even have to take notes. You just have to listen, because it's not educational purposes. I say we start right off. Let's not waste any time, okay? Let's get down to business. The first thing I want to talk about is psychology. Psychology during the week. As you know, this would be currently the second week. Wait, when was... I need to get my calendar up if it's going to load. This is the first week that we've had after hitting all-time highs. So this would be the first Friday, or the first of everything, of price action after hitting all-time highs that I've personally experienced. And as you can see, I'm pretty sure every single day was a loss. I have lost every single day of this week. Understand the fact that I'm being completely transparent with you right now. Not a lot of people will do that. I have lost every single day that I've traded this week. And every single day of this week, I have learned a lesson, a very important one. And I see this repeating every single time. Is that if you have the wrong bias and the wrong order flow, you're going to take the wrong trades. Now, today was a little special. Don't get me wrong. Today, Monday, and Tuesday were a little special. I just want to briefly go over someone that I've been looking up to, and his name is Herein, and I'm in his Discord, and he gives out these free alerts and free analysis. And what I like to personally do is I don't watch this live. I don't watch his alerts live. But what I do is I do my analysis on my side in the morning, at night, whatever. And then I go into all these Discords and I see what other people have. Because maybe someone else is trading NQ and maybe they have a different analysis, or maybe they have a different opinion on what happens today or tomorrow, or what will happen, or what they noticed and what I didn't, right? And sometimes that is extremely helpful. For example, this whole chart right now was based on Fearing's analysis. I don't think I could have ever done this chart without Fearing. I mean, sell side, buy side, yes. The main thing I was perplexed on was on NQ and the SPX. He had, and this was a while ago, he had something like this. He had the -4 standard deviation on the market structure shift. And, he said, oh yeah, standard deviation delivered. And I was like, what is he talking about? Because I thought it was in the 1 minute, like here. And I've been talking about this. I thought the standard deviation was from this swing low to this swing high. So I did standard deviation. I was like, what do you mean -4 has been hit? It's not even near it. And so for this whole entire week, let me just, let me do this real quick. This entire week, I thought that we'd go above the -3.5 and go to the -4. So I was bullish. And as you can see, price, even though this is standard deviation, Price did not come up to the -4 this week at least. But it did trade above the negative, or actually hit the -3.5 on the dot. And then what I realized, and I asked, and he gave me info, and he's like, yeah, I did it on the 1 hour. If you look carefully, it's the 1 hour. Or the 1 minute, but he took it on the 1 hour. So this helped me a lot because this was yesterday. And personally, if you remember yesterday's video, I was bullish and I was not paying attention to this OT fair value gap at all in OT. And I have here in a new thing where it says clean chart equals clear mind. That is super important to me, especially while trading at school. When there's a lot of stuff marked on my chart, I just get lost. I'm like, there's a gap here. I don't know what it says, but if I write under it, it takes this space up. And when I go to execute on my phone, there's just thousands of things. And then when I try to put an alert, it takes up so much space. I can't edit the alert, blah, blah, blah. I get lost, right? So clean chart equals clean mind, right? Now, on the 1 hour, I drew what he had, and I try to match his chart to understand what his analysis was. You can see the 1 hour has this market structure shift, super big deal, whatever, blah, blah, blah. -4 gets treated here, but you can also notice the -3.5 is at the exact same level. So that's two confluences. But we're going to go off the 1 hour for -4 standard deviation. So that's a huge deal. And this is NASDAQ, even though I traded the S&P 500 and QQQ today. But we're going to go over the NASDAQ first because that's what you guys mostly trade. Now, I'm going to, there's so much shit to talk about. This was what I like to do now in my analysis, and what I've learned from fearing, is that you go from the daily to the 1 hour. From the 1 hour, you do most of your analysis on the 1 hour and the 15 minute, and you take your entries on the 1 minute. That's the setup he has me running. Not like I'm not in his class or anything, but this is what I've noticed works best with analysis. You have your bias on the daily, and everything should trickle down to the 1 minute. So if you're bullish on the daily and the 1 hour, the analysis should reflect that the chart is looking bullish and your analysis is bullish for the 1 hour, 15 minute, and your entry should be a bullish entry on the 1 minute. So buy models in this case. So let's talk about what happened today. And if we go back on NQ and we look at the daily, I just want to look at what I had with NQ. And here's what I had yesterday. It looks a little small. Let me see if I can copy the link. Let me go open a tab real quick, just so we can zoom in. Okay. I said NQ looks bearish as of right now. Previous day low, closure above would be ideal, and respecting the volume imbalance or just a fair value gap at the moment, which is here. And this was 8 p.m. something yesterday night. Would want to see it turn bullish and trade into internal buy side. So I was targeting this. As you can see on NQ, when was this? 1 hour. As you can see, the daily looked bearish, but I hoped that this would be bullish. And you can see on NQ what happened. So this is the target up here. So I had this. That's the target. And it traded down. This was the gap. So right here. So I was hoping for this candle or these two candles to wick back up. And what happened? It came down, 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 down. It came down. And this is why I love standard deviation so much, man. It came down to a very specific level. It didn't just turn around anywhere. And I actually want to talk about, I know I'm switching topics, but I want to talk about this real quick. The reason I still trade ICT in its concepts to this day are two factors. The first is what I'm about to show you, and how price is, in a way, it's fractal. And the second is because sometimes price lines up with things that are to the tick, and it's so beautiful. And I know that if I keep studying, I keep watching this price live, and I keep forward testing my strategy, one day I will become profitable if I keep putting in the work. Yesterday, I was tempted to learn about fractals, which I learned a little bit. And they said from the outside, yes, it looks confusing, but it's easy to understand why when you get the software and stuff like that. I was able to get the software early on, so I do have access to it. Listen, fractals can catch the top and bottom, but what's the real part of trading if you don't understand what price is doing all the time? Is that really trading? The art of day trading, the art of waking up in the morning, having analysis on your chart. Yes, it might look corny, might look goofy to have sell side. What the fuck is buy side? This and that. But if you understand everything, trust me, it's not goofy anymore. That's how you make money. Now, full respect, if you can make money off fractals and it's something that works for you and you completely understand it, then guess what? Complete respects. Everything, all my respect goes to you. I'm not hating on any communities that trade other things except trend lines. I hate trend lines. I hate people that trade trend lines. That's the only community I hate on. Okay, let's get that straight. What I'm trying to say is this 1 hour, this 1 hour PD array that hit the buy side liquidity, that also hit the negative 3-point side standard deviation, had a nice reaction. And you can see it started to sell off. And this is a clear indication of, sellers are stepping in, and they were very, very clear to where direction and where sellers wanted to be. As you can see, very big sell side here. And as you can see here, they completely rejected buyers when they try to buy it up. Completely rejected OTE. We talked about this yesterday. And if you don't, I'll link the video up there. Completely rejected. As you can see, it rejected into what? Live market, and then aftermarket, and then even pre-market. London session. London session lows all the way down here. And what's funny about this standard deviation is you can see it almost comes down to the range. Almost down to the sell side liquidity, which at the time, because I thought we were bullish, I didn't even see any of this. Personally, I didn't see any of this until I came to the 15-minute and looked at this. And I said, if there was a 1 hour market structure shift, right? First of all, where would it be? Because we previously said, oh yeah, it would be down here, right? Because that's a swing low. And as you can see, yeah, sure, it's in the range, but that means that the 1 hour would be like all the way down here. That's big. And I'm pretty sure what Fear had in his Discord, he went down to the 15 minutes because that's where he does his like technical analysis. And he noticed that oh shit, I need everything back. Whoops. Articles. He noticed that the standard deviation, there was a swing high, but the swing or the market structure shift that actually happened was down here. Intermediate term low, swing high, market structure shift, OTE, right? It's the same sell model, just on a lower time frame. And as you can see, the standard deviation lines up with all of these levels. All of them. Negative 2.5, it sweeps it, it closes above. Negative 3.5, you can see price action respects. Now this is like 6 p.m., so this is like way after market. So I'm not expecting all this respect. But when you're using standard deviation as a trader, you should know that the ranges are from 1 to 2, 2 to 3, 3 to 4, 4 to 5. And then in those ranges, you have 1 to 1.5, 2 to 2.5, 3 to 3.5, 4 to 4.5, and then 5 to 5.5. That's like the range itself. And then inside, there's a consequent encroachment, and that's what you target. And guess what? Here we end up, this was yesterday. 7, 8:30, right? This is when I had my analysis. And then the targeted, right? -4 would be the bottom of the bottom. Usually we don't target the -5 unless it's like a really small range. You draw from the -4 to the -4.5. Let's just make sure I have consequent encroachment, right? So that's the area of the standard deviation. You can go back in time if you're targeting liquidity, but we don't need to do that. Maybe there's a fair value gap. Yeah, fair value gap. Doesn't really matter. I just care about the range because what happens? As you can see, yes, okay, fine, yes. We sweep a little bit, but that's good because -2.5 is swept, but it closed above. We closed above. We closed on it and above. We tap back into it, and this is what, 2 a.m., 3 a.m., so this was London session, right? Let's look at the 1 hour. 1 hour, as you can see, there's an obvious reversal somewhere. This is where the market started going back up. And so when I woke up around 5 to 6, this is what I noticed. Very strong propulsion up. So I was like, oh, let's go. My bias was right. It's going back to be bullish. Let's go. Let's go. Turns out it wanted to go lower. Now, where was the what's called? Actually, before we talk about this, let's talk about this. Midnight open. Lows get created in the reversal range under the -4 standard deviation. 1 hour market structure pre-market missed. Yesterday's bias was bullish until price closed under a level and everything was switched to bearish. Hence why doing analysis in the morning, which is fresh mind, would be no biases. Okay, yeah. Asian lows got taken out. So another mistake I do is wanting to trade when market opens. Right when 9:30 opens, I'm in class. I want to get the day over as soon as possible because I don't want to be in the middle of class and miss a beautiful trade. Unfortunately, I think that's the hard reality of what trading is in school. Sometimes you're going to have to miss those days. Sometimes you're going to have to miss those trades because you just cannot be on the charts. And that is completely fine. And I just have to accept that. Now, what was wrong with the bias today, though, and this is where I will call out Fearing for a little mistake he did. And let me just go to the alert he gave. Let's go down into today, right? Listen, look, at 9:44, 10 minutes after fucking market open, he still had no analysis, no bias, nor draw on liquidity. So he, in his mind right now, in this chart, there is nothing on his chart except, the standard deviation and whatever he had here. There's absolutely nothing. He's looking at the 1 hour and he's got nothing. He doesn't have previous day high, Asian, London. He's got nothing. And he's just watching what price does. And you can see not even 10 minutes after, 20 minutes after, maybe like 30 minutes after, he has watched 1 hour time frame, has a potential New York kill zone OT model. If this begins playing out, we can get previous day high. We didn't get previous day high. Previous day high was up here. As you can see with the, oh, this is smart with the OT. You can see the, oh, I might do that. Hold on, let me, yep. So you have the OT here. I personally did not even see this. Because personally, I was, where was I? I'm pretty sure I was bullish. I was bearish. I was bearish. My bad. And I'll have to redo the trade on what I did. But as you can see, there was a bullish OTE. Came out at 10:15. Only problem, yes, has already ran the highs. Problem is, where it was, where his was. His standard deviation wasn't this one, it was this one above. And so the problem is, it went above 1.5, and when it came back to the OT and the fair value gap, that was a beautiful trade. It ran up, but it did not hit any profit target. And this matched up with the buy side liquidity, and this is where I think that Friday is, again, probably one of the best or one of the worst days to trade, because you can see, again, this is chop. It goes up, and then it closes back to where it basically opened. It goes up, doesn't hit any of the profit targets. Yes, you could have taken profits here and there and here and there. But if you go down to the 15 minute and you did your analysis there and you watched that there was a 1 hour market structure shift, you could also see that there was a 15 market structure shift right here. And that the profit target and those highs were exactly matched with the -2.5. Hence why I drew this line here. Hence, when you took your 1 hour OTE trade, which to be honest was beautifully taken, because if you take the swing low to the swing high right here, boom, OTE, you would notice when you go down to the 15-minute and you have your live trading data and live action, you see it runs up, runs up, runs up. It almost takes out the negative 2.25. So that's another target because it's that close. Gets rejected. Whoops, that was my bag. Gets rejected right away. Wicks. But we don't take an entry on the 1 minute. We take an entry, or we don't take an entry on the 15. We take an entry on the 1 minute. So we go down to the 1 minute. You can see very hard selling action, very hard selling action. And I believe I was in a trade. I was in a trade. Let's see. Let me try to find what I had planned. Pretty sure I had this marked out here. Okay, this was the trade I had. Let's see. I was on the 1 minute and I had this marked out as the trade. And this is where he stopped me. Okay, so yes, this was the drum. Oh, okay. So I just had another sell model inside. Okay. So pretty sure. Where was this? Oh, this was SPX. Oh, that's right. That's why I'm not seeing on NQ. But basically what I had on SPX, let's see if it's still there. Let's see. Oh yeah, it is there. Perfect. So NQ as you see, but SPX had something a little different, and I saw the sell model during the, if you go to the 1 hour, you'll see that SPX ran up above previous day high, and to me this was buy side. And so let's go to the 15-minute. You'll notice again it looks super choppy, doesn't it? But it runs up, and then I was like, okay, yeah, it's going down. We'll have a sell model, and we're going to keep going down. The reason for that is when you drew that 1 hour or 15-minute standard deviation, you can see the range. I said that the sell side would target this equal lows, a negative 5.5 standard deviation leg. I think that we would be breaking all this low resistance liquidity, which was always fucking me up right here, which was right here, right? And I thought we'd take that out, go to previous day low, sell side liquidity, and the standard deviation on this market structure shift here was also very good. So what ended up happening was that big move on NQ to go to the 1 hour bullish OTE was the entry I had. And so what happened was we had SMTs with NQ, and that created that bullish run up. As you can see on NQ, let's just compare charts. NQ, let's go back to this down move. You can see on NQ we swept these lows, right, which was these lows down here. So we swept. So I was like, okay, good. We're going up. I was watching this live. When was this trade? Oh, look, it broke my rules. You know why? I'm supposed to trade after 10. I traded this at 9:34, hence why the loss. And I'll explain how this is a loss. But it's a good sell model. I mean, it worked. But, OT, market structure shift happened on the 1 minute down here. A little sketchy. All the way down, all the way down, all the way down. Draw the range. OT is marked out here. As you can see, price comes back to the fair value gap. I don't even have to tap the OT. Fair value gap taps right into it. Enter shorts, consequent encroachment. You can see the stop loss is like right under the OT. I wanted to be literally risk free. And I just had one contract here, no, 3 take profits, very small. And I was just targeting the lows. And to be honest, I wanted to target even lower, right? And when I was on my school laptop, school laptop, but you also realize the risk reward right now is 1 to 8. And usually mine are, if I'm not wrong, there's something like this. Wait, I just don't have this saved. Okay, never mind. I don't have it saved. But usually they're like 3 something. They always go to 3 something. So usually my trades are something like this. Like very, very short. And this was 8. So pretty good. So I was like, let me just take the risk off. And right away, I saw expansion out. So I was like, okay, cool. And then it came back up. I was stressing here, bro. I was like, fuck. And then it started chopping. And this is what I didn't like, because after these highs, or after these lows got swept, it started to show bullish price action again. And that's when we hit that, here, look at that low 1006. When is that? 1006. Yeah, that's when we hit that bullish OTE on NQ. And you can see we just ran up. And so I basically got fucked. because I only sold my contract because I was in class. I only sold my contract around here. So I was in drawdown of like $10. And I even posted this on my Discord. Let me just go real quick. Okay. I posted this, right? I was like, yeah, I consider this a win, but I lost because of the decay of the contract. And this was it, right? This was on my laptop. That's what I had planned out, live market. As you can see, it turned out this was a good trade, but it's just the contract got fucked. So that's how I lost money on this beautiful trade. Unfortunately, what I'm not happy with is the fact that this was the wrong bias. So we took the trade. Sure, it was a good trade, but I would have hoped to target what I usually target and have this kind of trade. Right now, yes, we'd be break even here because that would be our first take profit, whatever, this and that. It doesn't really matter. But it's because we didn't go lower, and I was fed up with that. I was like, why didn't we go lower? And then I look at Fear's alerts, and he's like, yeah, we have a bullish OTE on NQ, and it's freaking crazy, and go take your entry. And I'm like, holy fuck, I didn't realize that. And I did my analysis too early. And would you look at this? The 1 hour OTEs, you can see this level gets hit perfectly. Doesn't wick down to the OT level. This is what you want to see if price is going to respect the OT. Now, you can allow it to come down and trade. But if it already is respecting just the OT level itself, not even mentioning that there's an hourly level in the middle of the OT. As you can probably notice right here, there's a fair value gap you can mark out. Boom. You can see this 1 hour fair value gap. The consequent encroachment gets respected. That's what I was looking for. So the OT gets respected. The consequent encroachment gets respected, right? You can delete the OT itself. And then right off there, you're looking for in a way, it's a mini buy model, but you already have your entry that's, you'd be in your OT entry right here. So in a way, you'd be long, maybe not like here. I'd just go long here. Because I'm doing realistic price option, right? If you're getting your contract ready, blah, 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 you might not get the fill price here. You might get entered up here. So that I'm just being realistic with it. Stop loss would be the OT. Where's the OT? I'm just going to guess it's like right here. And then what inside of this, you're looking for an expulsion move out of this range, close above. You're also looking for like a mini buy model just to really see if price is willing to break. I'm going to draw a trend line here. You're not going to like me for this, but this is the trend, right? So what we're hoping to see is some kind of trend that breaks out. Unfortunately, I said break out, yes, but you can see, yes, we break out of this high, but this is, to me, this is still part of the trend, right? We're making lower highs, lower high, lower high, and then lower low, lower low, lower. The next thing we want to do, the next thing we don't want to do is make a lower high and then a lower low down here and take us out, right? So off this consequent encroachment, we want to see a move out of that range and make a higher low, not a lower low, a higher low. Boom. We like that. Makes a higher high, comes back, and you can see you can just draw. There's no OT involved, but you can just draw the range. It comes into discount. It makes a what? We create what on the 1 minute that we can target? A 1 minute fair value gap. Or my bad, no, this is a 3 minute, I'm pretty sure. Oh my God, of course we get reset all the way back, bro. I'm lost. Wait a minute. No, I think this was a... Don't get me wrong. I think this might have been a 15 seconds. I think it might have been something like that. No, it might have been a 30-second then. Where'd I get this? No. Where was this? Am I tripping? Where did I get this fair value gap from? Might have thought that this was not... I don't know. Anyways, you're basically looking for this to get respected. Again, I mean, even on the 1 minute, there's a bunch of little lows here that you can target here. I mean, it's not very hard, right? You see this gets respected. Obviously, in that range, it's in the discount. It gets bought up, makes that lower or higher low. My bad, higher low. And you can see now we're going up. I'm not using trend lines here. I'm just showing you the I guess the trend. We do inverse this fair value gap, which was good. Maybe you're looking to tap into this on the 1 minute. Could be a very nice entry, but you can see we only close above here, and the real tap would have been here, and we tap back in this place, but that's not exactly what we got. You could have entered with ICT something like this, right? Whoops. You know, with the tap back in, consequent encroachment, and just the expulsion off. Now, the interesting thing is inside this model, right? You on the 1 hour, if you're entering on the 1 hour, you'd be targeting what? You'd be down here, but you'd be targeting the negative 2.5, right? The negative 2.5, you could be even targeting the buy side liquidity, which I was previously doing if you were doing this because of fears alert. But if you had the right alert with the right standard deviation, you'd be down here, the negative 2.5, because this already got to the negative 2.25. So it's very easy to run up. So very, very, very good trade. If you caught it, if you caught it, very good. Let's put it back to where you'd be here, yeah, somewhere around here. Boom. Very, very good trade, right? Definitely would be in profit. Very, very good trade. Congrats if you caught it. The only problem, or not the problem, the only thing is when we came back, we sold off, and you can see on the 1 hour, right? We hit the, we hit the negative 2.5 here, standard deviation. We didn't come and grab this buy side liquidity. So right away, that showed me right now, it shows me we're in a bearish model and we're in a bearish narrative. So what would I be looking for? I would be looking for obviously a sell model, not a buy model, because now the analysis and the narrative would be sell. So what I do, I took a buy model at the very end of the day. No, I'm kidding. Let's see. Wanting to trade when the market opens. Yeah, we went over that. Trading options will go. Yeah, so I'm going to quit options because of the contracts. Clear chart, clear mind. Talked about that. Not seeing full picture. Okay, yeah. So one thing I also want to talk about is, for me, and this is like my personal notes, is only start to chart maybe like 5 minutes before market opens, because that's where really, maybe not because I'm in class most of the time. It's just having a clear chart when market opens is easier to see, and you can, with experience, obviously you'll spot the different things. But me and Fear, for example, had the same idea. We wanted this buy side to be some kind of target. But as you can see, price did not target this. It didn't want it. And it came right back down. And you can see on the daily, this daily candle open. No, that's not the right. Yeah, there it is. It opened down here. The low was created here. The high came here. And I'm guessing some people caught the high day. And we sold off. And now we're creating a doji. So to me, this is chop. Because we're not creating an expansion and we're not breaking above the high that was created here, nor previous day high, we're in this range. We did close it under like previous day low here or something. I don't know where previous day low was. But we just swept the previous day low, made that low, came back, and then came back to where we opened. So to me, this was chop, and it was bad price action to trade. I'm not sure it was bullish, and that would have been great. But I had the wrong bias, and I had the wrong order flow. Now, let's talk about the second trade, or the second demo trade that you could have taken if you were a little more patient and you understood the order flow. So now that we know we're bearish, and we have that kind of bearish mindset, what I was looking for after, this was lunch. Yeah, right after lunch, we had this big ass sell off on the 1 hour, right? This is where you do your analysis on the 1 hour. And you notice that this 1 hour SIBI was still not fully filled. We didn't fully fill this. We did trade under consequent encroachment. I was not too worried about getting it filled. But you can see that price comes back into it. I'll go to the 15 minute here. It comes back into it. Where's the 1 hour here? It comes back into it here around lunch, after lunch, 1:30, blah, blah, blah. And you can see price comes down, and it sweeps this low, which is important. It's going to click. Sweeps that low. And now in my mind is if it creates a buy model in this, because we sweep again, if we've already done this move, there's two options here. We can either get past this liquidity level and completely sweep it and completely sweep this 1 hour SIBI and go even lower to sell side, which, you know, would be ideal because that's our bias. Our overall bias was bearish. And the rest of the day bias was also bearish. It'd be cool. Or the second option would be it consolidates. And the third option would be it creates a buy model and gets out of that range. The only thing is that I knew that with experience, if it goes up like this and then it sells off everything it just bought, comes back to the same area and sweeps it, it's not going to do this. I can tell you that for a fact. Because of how fast this sold off and how fast this got bought and how fast this got sold, whatever the last leg of this means that it's going to go that way, if that makes sense. So what I do on the 1 hour, you can see it. There's a fair value gap right here, or a SIBI or BISI. SIBI. No, this is a BISI. That's a SIBI. 15 minutes where more analysis is carefully done. You can see that I didn't target, well, you could target, but you could see that the 1 hour SIBI, consequent encroachment, respect to that price here. But what I had was the consequent encroachment of this SIBI, of this fair value gap here that you can see there. And I'll show you that when we go to the 15 minute, you can see this doji. Oh, it comes down here. Let me go to the 1 minute to see if there is a buy model that we can enter off. Let's look at the 1 minute. Let's see what happens. Put this down here. You can see you have price there. Look how it sweeps that. So we get internal sweep of this liquidity down here. We already have a high that's marked out for a market structure shift. Like I'm seeing this live. It's happening live. I'm like, okay, that's already high. The only problem with this high is that it's not in intermediate term high. There's no fair value gap here that is swept. So I'm not too focused about that. I just know that there's a high there, which created the low, and we could always go lower. You can see price respects the consequent encroachment, like to the tick, like quite literally to the dot, like it closes right above. Sweeps internal and then sweeps external liquidity. So 3 PD arrays, bullish PD arrays. That's good. That's part of the model. It's technically a high time frame PD array. And then it comes up and you watch this. And this is where, again, this is why I love saying watching price action and experience, because this is when I knew, oh, this was going to work. Price in 2 candles only. That's all it is. Or 3 in this one. Well, after this swing low. So 2 candles. 2 candles to take out this high. 2 candles. That's all I needed. Some trades you'd see it runs for 1, 2, 3, 4, 5, 6, 7, 8 candles. And then it finally takes out the market structure shift. Here, very clean. Higher low, lower high, my bad, lower high, lower low, higher high, market structure shift. 1 minute off a 15-minute probable calls of a 1 minute buy model. What do we do now? Standard deviation. Does it line up with anything? Yes, it does. No, it doesn't. Kind of. -2 lines up with the equal highs. Just, take profits here. Not too big of a deal. I'm not too worried. The -2.5 is just a mark there. But what I really noticed is this consequent encroachment of the SIBI. And I was like, let me mark that. Price is going to go and hit that. I promise you. And you can see, let's redraw this. It comes up, it comes up, it comes up, it comes up. Oh my God, it gets these highs. I'm like, fuck, is it going to break? And this is where we watch. If it breaks above, it's already hit our targets of standard deviation, might not be so inclined. But you never know. I mean, we took it on the fucking 1 hour, so you never know. Might not so be inclined if it's already hit our take profits. You can see it reverses around this area, which we like, the -1 to -1.5. It can happen. If it happens before the -1, 2.5, that's cool. That's what we prefer. If it happens above, that's still fine. We can allow it. What we don't want to allow it is close above these equal highs and continue. You can see it comes back, breaks structures, and it comes back to what? Yeah. There's nothing on the OT, or there's nothing on the 1 minute with a fair value gap, right? The only one that I could spot was this one, right? But as you can see, This one already got traded through. And I want something that isn't traded through and it's a complete imbalance because this already got rebalanced. So there's nothing. So at this point, this is where I would use my last tool, which would be the OT, the optimal trade entry, without an imbalance, and go completely off of it. And you can see, what do we get? Enter the consequent encroachment. Right away with experience, the doji, we have everything closes above the OT. That's a good sign. That is a really good sign. What's another good sign on the 1 minute, and I love seeing this, is this incredible low resistance buy side liquidity that is sitting right here. All for us to nicely take out all that entered in liquidity, because what's the real draw on liquidity? Up here and up here. So we don't care about this. We can easily run through this. As you see, low resistance because it's not showing selling pressure, then very high buying pressure to a level that we really like. Boom. And it doesn't have to be perfect. Just know that if you got here, I don't know, first of all, I don't know how you caught that because there's no levels here telling us that. But I like to target the OT or the consequent encroachment of a fair value gap if it lines up. And boom, runs right back up. It runs up. Target the negative 2.5. And guess what? And this is why I said in the beginning of the video, I love ICT. Where did price close under this 1 hour, 15-minute SIBI? Consequent encroachment, the middle, the equilibrium. It traded not even, and I kid you not even, $1.5. Not even. One tick. Half a tick. Right above. And it closed right under. And it ticked it again to the dot. It ticked right there to the dot for a take profit. And then guess what? It never, ever retested it again. Ever. Not a single time. Can fractals do that? I'm not hating. I'm just saying. What I'm also trying to say is just this. If you showed someone regular this right here, the buy model, I could explain everything in here, everything that's happening. The high time frame narrative that we have here with the 15-minute hour SIBI, the external liquidity that gets swept, and the internal liquidity that gets swept. I could explain that. I could completely explain that. The standard deviation, the 1 minute market structure shift with the 1 minute entry, with the 1 minute take profit, I could explain that. The 1 minute low resistance liquidity, I could explain that. That to me is art. This to me is why I love ICT, because sometimes, some of these days, even though I lost, to me, this is considered a win because I have restructured and I have in my mind right now, it is more clear that this buy model is working in live markets, and that with the right experience and with the right amount of time that I spend in front of these fucking charts, I will see it one day and I will take a trade, and I will take more than one trade, and I will be profitable off this model if I understand how it happens, why it happens, and everything overall. And the beauty of it, and you know what I just realized, is, dude, day trading, you don't have to catch, you don't have to catch this move. Look at this. You don't have to catch this 100-point move. You can catch this little tiny retracement. Guess what? That's a trade. You understood that one better than this one. That one worked out better because they had more money and everything involved, and everyone took it. But who took this one down here? Who took the one with no less risk? And who took the one that was basically right before market closure with not so much volume, but had the insane analysis behind it? with the level that was still untouched. And when it was touched, it was that external liquidity was touched to a tick. The internal liquidity was swept. The 15-minute BISI, the 1 hour BISI consequent encroachment was respected. The 1 minute model was created off that bullish retracement or the bullish reversal off all that internal swept liquidity. Who took that trade? Who predicted that price would come to the 15-minute or the 1 hour, 15-minute consequent encroachment of that BISI and tap it by a tick or two? And who predicted that it would come right back down and you'd have already hit TP? Who did that? Who took that trade? What I'm realizing is that sometimes you don't need to trade right when market opens. You have the entire day to pay attention to what market does after an hour or 2 hours, after buyers and sellers are coming in, especially on a Friday. Everyone wants to get their position out or in. There's going to be a lot of people trading. And there was news at 8:30. Hence this bullish, run up. Right? Let's go to SPX. Same thing on SPX too. There was that buy side liquidity with that -4 standard deviation leg on the 1 hour. Let me go to the 1 hour real quick. We again had a lot more stuff on this, as you can see. Again, there was that 15-minute market structure shift on that down move here with the OT, as you remember. Again, the standard deviation showed that the liquidity down here I thought it wanted to be here for the day. I thought that's where it wanted to end, just absolutely sell off. As you can see, it's starting to do that. We can see this low get run out, right? Because it's looking for that after hitting the consequent encroachment of that BISI on NQ. So I'm guessing there was the same move here, as you can see, traded a little higher on the 1 hour, probably the same on NQ. And it's going to come down and hopefully take out all this liquidity down here. Previous day low, so this is 2 days now, so previous day low would be somewhere over here, or right here. So previous day low of the other day, and then sell side liquidity external, and then that final target down here, right? But that's the weekend's coming up, so I don't know what's going on. Previous day high buy side liquidity, as you can see, SPX was higher, and this is why I was so bullish at the time. And I never expected this to come up because I thought this was protected. But to be honest, this is where the market kind of surprises you. It almost did this. That's what it did. It went like this. This is exactly what it did. Look at this. Wait, let's put it here. Let's put it here. Lows, something like this. The market kind of did this, no? Came down. Low, came back up, came all the way back up, and then what? And then we sold off again. And this is the part: do we sell off, or do we sell off a little bit and regain everything back to go higher? I don't know. We'll have to do that over the weekend, or we'll have to wait until Monday to see what happens. But again, same thing. Look at this. To you, it might look clean, but to me, this just looks like a shit show. I mean, we don't need this now. Right? Why do we have this? We don't need this buy side anymore. We don't need that. This we still need. I mean, I still want to know where that is. Sell side liquidity we need. Yes, we need. The only thing is the standard deviation, right? I don't need all this fucking bullshit. I do need this too, though. You can see the 1 hour, again, looks very choppy on SPX. Let's go to the 15-minute just for more analysis. You can see the news on SPX takes out these equal highs, if you will, or that main buy side up here, boom, then we create the huge what's called the sell model, which again I took on the 1 minute. As you can see, we can probably go over this again. Standard deviation was set, the SMT's bullish run up, you remember that, fair value gap, enter all the fair value gap. It was a good entry, don't get me wrong, it was a good sell model. The only thing with the price action, right, on the 1 minute, look at this, and this is what I've been doing this every single day where I lost. Look at this price action here. You can see look how fast that came up, and look how strong that was. Okay, this is very strong. Very strong. Now, you can't see the buy model on SPX, But I want you to pay attention to these wicks, right? The wicks in the body, especially the body right before. That's also important. It almost looks like it wants to pierce right through that, right? It could almost be like a body like this. Look at these buy models. Before we go up like this, look at what a price does. It's almost like it's consolidating. No way. It's consolidating before price wants to run up. Hell no. The level it hits, I'm guessing this was, you can see this on NQ, but not SPX, but just this, right? I'm guessing that the buy model was created here. There was some kind of PD rate, as we saw on NQ, as we literally just talked about. Look at the wicks. Wicks respect, right? Everything closes above. Here, that final wick up here, sure, everything respects, but it barely sweeps. To me, this doesn't look clean. I mean, it's very, these wicks aren't like dojis, right? They're not creating those dojis. They're not creating this doji. They're not creating dojis like this. They're very strong. They're engulfing. And especially this candle right here, the way it closes like this, it came down, engulfed, and closed all the way up here. And then this is the candle that creates the whole down move. But that engulfing thing, when I was in the trade consequent encroachment I entered here, dude, I was holy fuck, this is going to run me up right there and there. Right there. I knew it was going to happen, right? It didn't. But let's just see, because I really want to highlight this on NQ. For example, right here. If you remember the SPX one, right, the 1 minute almost had a candle like looking like this. Like if this was the bearish version, let me just put this black. Let me just do this, right? It almost had a candle. Whoops, this might be a little big. It almost had a candle looking like this, basically, right? So imagine that happened, and then sure, the doji here, but this already tells me that there is so many sellers, so many sellers that what does it want to do? Ultimately, it'd want to go down further, right? The same example on SPX, when we are taking our entry, what does it want to do? Oh my God, it's running up. It has bullish SMTs with NQ. What does that tell me? NQ didn't do this, by the way. NQ didn't run up, by the way. NQ did not do this. If you remember, NQ stayed down here and just traded lower. Traded lower to what? Thank you for asking. It traded lower to the OTE to run all the way up here. Because that's what it really wanted. That's what it really wanted to do. And SPX, you know what it was doing? It was grabbing that liquidity, those sellers, so it can take all these short people that are shorting here out, takes everyone out that's shorting here, everywhere. Has all their buy stops up here, takes everything out up here, boom. Buy a tick, takes that out, boom, and then starts dumping up again. But it starts dumping to accumulate, to have all those buyers down here, boom, and then it buys up. And if I waited until 10, if I didn't take a trade until 10, and I had both NQ and SPX, and if I was at home and I had the charts perfectly lined up, I 100% could have caught this. Right, again, SPX, this move up on SPX happened on NQ. Look how big and bullish this was, and look how bearish this was. This barely didn't want to go up above this high. All I wanted to do was trade lower, and this right here, and I'll mark it here with, with blue. Oh, you can't transfer it. That's right. Is the same that happened here. That's exactly what happened. So this came up on SPX to take out those buyers and stuff, or the shorts, and then to go short again. And NQ was just accumulating price to finally hit that level and to repulse right off. What was the mistake? The mistake again was having analysis done wrong in the morning. So then only looking for a sell model, even though we were bullish. Sometimes, as you can even see on the 1 hour, the action, or the action, this happened on AQ, not SPX, but the buy model itself doesn't get fully created until what, 8 and 9, 9:30. So yes, it happens live, but the fact that you have to go live and watch price get created and get created with the model, that's hard to do. Right? You got to be on the charts, and I would like to be at home with my big 2 monitors watching the whole charts and having SMTs, because on a school laptop, you can't really do that. And my TradingView free trial is coming over, so I can't really have 2 screens, 4 screens, whatever, and watch price go here, go there, come here and come there and fucking do whatever, right? What I would like to do now is to fully, wait, what is this? Oh yeah, fears analysis. Okay, yes, we did this. Oh fuck, I shouldn't have noted. Oh fuck, yeah, I always delete them. Show the right one. Yeah, I did. Wrong bias, bullish yesterday. Switch. Yep. Took a short on one, but the contract was fucked. Yep, talked about that. Neutral bias is what I should have happened, and it also is the first thing on Friday after hitting all-time highs. Yep, talked about that. So, lesson learned today. Lesson learned was having the right bias and order flow, having the analysis done at the right time, not super, like, what I'm not going to do is do my analysis right now, because what I got fucked doing yesterday was after the Thursday trading session, I went in at around 8 and did my analysis and thought that some fair value gaps would respect. To be honest, I was dumb because I knew it wouldn't work. I knew that that one little tiny level in pre-market and aftermarket would get absolutely ran through. So it's only smarter to let Asian and London session absolutely play out and do whatever it needs to do, and then come during London session, which is 6 a.m., and then do your analysis from 6 a.m. to whatever. Usually I'm up in the morning, at 7:20. I'm at school at like 8. So I would start my analysis at like 8:10. Fully lock in. I have 30, 40 minutes to do that. I think I can do it. Again, on a screw laptop, it's a little hard. I'm also giving call outs and stuff like that. Another thing I want to talk, if you're still here, we might stop doing the premium thing. It's just I want to focus on doing some demo trades and really understanding the strategy, really wanting to understand the POIs, right? Another thing I want to do is have set POIs, right? Points of interest. I don't want to follow people on Discord and follow their alerts and to see if I'm right. What I want to do is have my bias, right? And have my alerts or whatever. And if it works, it works. And have my POIs and my points of interest and my high time frame PD arrays. Obviously try to learn from others. But what I ultimately want to do is get on the charts, set an alert. And if a price comes down to, or comes up or down to that point of interest or high time frame PD array or whatever it is, alerts me, boom, I get on the charts, 1 minute, I look at the 1 hour, 15 minute, boom, 1 minute, entry, boom, buy model, sell model, enter, get out, done, right? What I don't want to do is start fucking previous day high, this, buy sell liquidity up here, targeting this, targeting that, blah, 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 this and that, and blah, 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 blah. Because then what happens is this whole thing, this whole chart gets absolutely messed up, and when you're on the 1 minute and there's fucking lines going up here, and there's this, and there's the fucking fair value gap right here, and then there's the fib here, and then there's a fucking comment up here, and I'm fucking talking about this, and there's a fucking, there's liquidity up here, and then there's fucking up here, and there's a trend line down here. It just looks messy. I don't know what's going on, right? I don't know what's going on. And what's easier is for everything to just disappear. Just boom, gone, boom. And this analysis, it can come back. We can easily come back to it. I'm not going to delete that because that's important. But we can easily come back to it. We'll talk about this during the weekend or on Monday analysis. Probably do a weekly outlook. I'm probably also going to stop those because I don't want to set my bias too early again, right? Because weekly outlooks are technically biases. The only thing I want to last off on is DXY. So as you can see, let's just look at the week and just look how not bad this week was, but I was definitely expecting something else on DXY. DXY moves very slowly, and I really don't like it, especially this week. It just came up previous week high, and then almost came down to previous week low. Consequent encroachment, I'm guessing this high got stopped. And that's all I did. And look at the day. Look at this fucking range. This just looks like pure chop. I mean, look where this fucking closes and everything. Like, this is like, that's bad, man. Like, this is horrible. This shit is just like, I don't know. I'm incredibly. It's just up, 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 down, up, down, up, down, up, down, up, down, up, down. So just the price action was exactly like this on NQ2 and SPX. It was just up, down, up, down, up, down. Especially today. Just look at this. Up, sweeps, comes down, sweeps, order block. Previous week high, order block. This is what it was playing against. Look at the day. Everything closes in this fucking range. Under previous week high and above this weekly order block. It's just playing this range. It wicks down. Sure, the wicks do the body or the damage, but the body tells the story. And you can see the body. What is it saying? We're going sideways, baby. We're not ready to go up. We're not ready to go down. And I think that is exactly what was said on, or perfectly on the 1 hour. We're not ready to go up. We're not ready to go down. We're gonna go like this. We're gonna go fucking sideways. That's exactly what we're gonna do. We're not gonna do something like this. We're not gonna do something like this. We're gonna go exactly sideways. Might sweep some highs, might sweep some lows, and that's about it. Because really, ultimately, the range itself is just this high and that low, or that high and that low. Really nothing, right? So that was really it on NQ. So I'll I'll do probably something on Monday. I don't know. Again, I want to keep pushing these videos, but the problem is I don't want to set my bias too early. Again, I want to set my bias like on the day. Maybe not for the week. Maybe we can have a weekly outlook and change the daily bias, but I really want to work on that because I think that's really, really important for me and the strategy. I'm going to have to do more research on the point of interest and the high time frame PD arrays. As you can see, these buy and sell models, you don't need a high time frame PD array. You don't need a daily time frame PD array. You don't need like a weekly order block or weekly fair value gap. You just need a point of interest, a high external liquidity point or something big that's going to impact the market. Today's example, the 1 hour OTE, right? Not everyone has that on their chart. Not everyone trades that model. Not everyone knows what the fucking OTE is. Maybe some people will have that fair value gap, right? Maybe people already thought, oh yeah, look, there's a buy model forming already. Maybe this is a fair value gap to them. Maybe, or fair value gap, market structure shift. Oh, maybe this is another market structure shift. And what's the displacement or the fair value gap that moves out? It was this fair value gap. Cool. Now, when price comes into this fair value gap or the consequent encroachment, guess what we do? We're going to target, we're going to enter off consequent encroachment. Boom. Where's our stop loss? Bottom of the fair value gap, which is smart, fine. Where's the standard deviation? Or just draw it up, swing low to swing high. Standard deviation, target the highs here. Boom, done. Trade. 1 hour, done. Donzo. Right? But what the fuck was this low? This low was off this 15-minute standard deviation, but that's not a high time frame PD array. Was it? A 15-minute standard deviation that's getting respected, that's not high time frame. That's a lower time frame. That's a 15-minute to 1 hour time frame. That is not high time frame at all. And it's not even a discount or premium because we're not even in a range. We're just trading London and Asian. Right? Because the current range theoretically is this swing high to that current swing low, if you will, if it's making that. Right? And if it's not, because this range hasn't been fully created, then the real range it's in is that swing low to that swing high currently. And if you really do the black range like this, you can see the equilibrium is down here. So anything under here can start buying. You can see we're under the 0.75. So it's like, oh, we're about to sell. Again, I'm getting off track, but I need to be paying attention to these kind of things because standard deviation is important. Not every level is going to get hit, but as you can see, those levels do predict where price is going to return and possibly be creating some buy or sell models. So we're just going to wait it out. We're going to see what happens on NQ, SPX over the weekends or weekend, and we'll see the news, presidential debates and stuff like that, or happenings, elections. Usually the price is bullish and bearish at the same time during elections. We just hit all-time highs. We could be, you know, hitting all-time lows next week, if you will. I'm not going to go too far. This is a long video. I don't know how long it was. I'm pretty sure it was just an hour. Not too big of a deal. Really not 2 hours. I could go for a lot longer, but I do have things to do. I hope you guys learned something. I know this was not really super educational. It was just kind of a big trade recap on NQ and SPX, and that's about it. And just a reformal of my entry and my consolidation and my confirmation. My bad. But yeah, I will see you guys next time, and I hope you guys have a good one. Stay safe, and peace.